so much in the news now. Well, everybody has to be regulated if we want to have a more coordinated economy. From there, we talk about investments, especially for startups. Nigeria is, well, we're attracting a lot of funding into the startup space, but are we sustaining it? Can we sustain it? That's the conversation that we're going to have with the managing director and the head of Africa for British International Investment, Mr. Christopher Chijutomi. Mr. Chijutomi, well, British International Investment has been very busy in Nigeria, especially in the agricultural space. We do know there are some companies that they are supporting and have been supporting for a bit. Now let's have Mr. Tomi is joining. Mr. Chiju Tomi, it's not just Tomi, joins us virtually now. Mr. Chiju Tomi, good morning.
Good morning, and thank you for having me.
Good to have you. So, British International Investment, I know some of even our clients here on Channels Television have been very busy partnering, supporting economic activities, especially you're very interested in the agricultural sector. What's the motivation? You know, because, I mean, every transaction, you must get something out of it. You don't just do it because you feel good about it.
Yeah, firstly, thanks for the question. So I guess maybe I'll start by saying who we are. So British International Investment, we're the UK development finance institution. And what we are is we are an impact investor that invests alongside the private sector to create economic growth across two main markets, Africa and then Asia. And then for Africa, Nigeria is one of our biggest investment markets. We've been investing in Nigeria since 1948, so just over 75 years is what we've had a history with Nigeria. And if I look at what we have today in Nigeria, we have over $700 million of investments across over 100 companies. So our motivation ultimately is linked to our mandate, which is to create economic development, which is to create jobs, and which is to try and uplift and drive the development of the private sector in a big market like Nigeria.
You are encouraged so far with the results of your investments. Some people do talk about sometimes investments are mismanaged or abused, you know, and that, of course, will discourage future. But would you say so far you're encouraged with the results of your investments in the different organizations you've been involved with?
Yeah, I think the results are, there are different reasons why we invest. So we invest, one, because we have to make a financial return back to our shareholders. But the big reason we invest is to create economic development. And we measure economic development in three ways. So one is around productivity. So are we creating enough jobs? Are the jobs then linked to taxes being paid in the jurisdictions that we're invested in? Are we driving efficiencies within markets? So, so when we invest, productivity is what we call it. So certain elements of our milestones and measures is around productivity. The other one is sustainability. So thinking around climate, thinking about adaptation and resilience. So again, that's a separate measure that we look at for different investments. A big one, particularly if I think about our exposure in Nigeria, is financial inclusion. So we are invested in a number of the banks in Nigeria so that the banks can be a channel for us to get to either women-owned or led businesses, either to the SME space, or specific sectors like agriculture, which for us is very important in terms of it being a big contributor to the Nigerian economy. So our focus is mixed across returns, but also impact. And so far, we've, again, 75 years in Nigeria. It means we have had good benefits of our investment in Nigeria. We are committed to Nigeria, particularly at this time where we do see, or we have seen, the outflow of foreign direct investments from Nigeria. And we think institutions like ourselves at this time is particularly important for enabling the direction of the new administration in terms of where they want to see Nigeria in terms of growth trajectory. So that's kind of what I would say.
All right. You did mention the issue of climate change and, how you measure your productivity or the results of your different investments. And I know that, especially when you talk about your interest in banks, there's a notion now that in pushing the climate change conversation, climate change or sustainability development strategies are also considered. How popular is that when you're dealing with Nigerians?
So I think first, I guess the first thing popular, it is a topic of conversation now across any channels. When you're speaking to banks, when you're speaking to manufacturing company, when you're even speaking to agricultural company, everyone is talking about climate, be it climate mitigation, as in utilization of renewable energy, reduction of diesel, burning of fossil, or people are thinking about waste or water, utilization of natural resources. So it is becoming a general topic of conversation. For us, 30% of my annual commitment across all my markets has to be in what we call climate finance eligible transactions. So for Nigeria, we're very keen and focused on trying to help Nigeria with its net zero transition plan. So us looking at investing in renewable energy or related industries. So we do that through banks, where banks are then supporting companies that do want to transition. Transition finance is a big area of focus for us, and we see a big opportunity in Nigeria when we think about the heavy fossil fueled industries. How can we help those industries transition from fossil ultimately through to sustainable fuel? How can we help them with the reuse of water or waste? So these are kind of key areas of conversation. I think 2 weeks ago, we had our lead for climate actually come into Nigeria to meet various industries, from steel manufacturers to kind of food and agri producers. And the conversation was around how can we help with transition finance? How can we help businesses move away from where they are today on the climate, but ultimately where they need to be in relation to the Nigerian government's drive to net zero?
Another issue is the ease of doing business, the environment, because if you're going to invest in a company or an individual or group, you would obviously want some kind of reassurance of that investment bearing or being productive. And when we talk about the ease of doing business, the environment in Nigeria, what level would you place the country at this time?
So Nigeria is, like a lot of countries in the continent, has its challenges and has its opportunities. If I reflect on, let's say, 18 months ago, the ease of doing business in Nigeria has been tough in terms of limiting the sectors where we could invest in, largely because, one, the issue around FX, the various multiple windows on FX. Turn the clock to where we are today now. There has been an FX liberalization. There are now no more multiple FX windows. So as an investor, that gives me some level of certainty in terms of when I look at companies or to invest in, or when I give companies facilities. So I think that's been a positive step in the right direction. I think the other direction that I was always challenging was the cost of the kind of monetary policies. Liquidity. A lot of our companies 18 months ago have struggled to be able to repatriate dividends out of the countries, or even capital to repay facilities out of the country. We're now seeing a situation where government has cleared some of the backlog. FX liquidity is improving. Again, as an investor, these are the right signs. These are the right positive steps being taken to at least give us an understanding of the enabling environment and the landscape. The other one is insecurity. We are seeing positive steps around that, but also oil exports, stability for Nigeria. More oil being exported means more revenue for Nigeria, which means more in terms of helping the FX scenario. So again, that's moving in the right direction. So I would say 18 months ago, the enabling environment was tough. It didn't stop us from investing because we're a long-term investor, but it did obviously impact the way we looked at certain sectors. If I now look at where we are today, and you could say nearly 12 months into the current administration, the trajectory is positive for us. So far this year, we've already invested over $100 million in Nigeria, both in terms of the food and agri sector, with a recent investment in Indorama, $65 million, as part of their $1.2 billion raise for fertilizers in Nigeria. We've given one of the key banks a credit facility. And these are all part of us seeing that the enabling environment is getting better. Not perfect, but it is getting better and in the right direction.
Yeah, well, maybe that not perfect would be referring to the taxes. Already, businesses pay about 40% of their profit as taxes, and now the country is talking about the cybersecurity levy, which of course is going to increase that tax burden again. Even though we do have a committee that is supposed to harmonize the taxes, I guess this would be one negative that is still in that ease of doing business environment.
Yeah, no, I think anything that creates uncertainty is negative for investors or for companies or for the general population. So tax contribution is a key part of why we invest. If I look at what we've done in Nigeria, so at 2022, we've paid roughly about $70 million worth of tax back into Nigeria, either directly or through a number of the companies we've invested in. So I think that's a key part for us. That's a key part of development in the country. But understanding the legal framework is fundamentally a key part of any investor, any business operating. So the ongoing discussions with the CBN and the government around some of the stuff around the fintech industry, clearly for us particularly, is very important because we are a big investor in the technology space in Nigeria, in the fintech. There's a number of our companies involved in conversations with the CBN. So clearly, I am not able to comment too much on it, other than we do hope a situation where there's clarity in the law, there's clarity in terms of taxes, there's clarity in terms of what these businesses can do and can't do. And yes, we do understand the driver for this. The Nigerian government is trying to weed out those that are doing things the wrong way. So I guess my continual encouragement is transparency and clarification on the law that all these companies must uphold to. But again, we're very affected. We're watching on the sideline through some of our companies who are directly engaging with the CBN. And I think the previous speaker spoke about some of these points and where things are ongoing. But without clarity, without rule of law, it's always very difficult for investors like ourselves and others to then come and do business in a country like Nigeria or anywhere in the continent.
All right, thank you so much for that. Sounds like a good place to end the conversation. Managing Director, Head of Africa of British International Investment, Mr. Christopher Tijiotomi. Thank you for your time.
Thank you very much.